Hi Akanksha, are we good to go? Thank you. Hey everyone, thank you so much for joining us at Liminal on this format, this webinar on navigating the PMLA compliance. To start off the webinar, I would want to invite our esteemed panel members to the webinar itself. The first member whom I would want to invite is Mr. Avinash Shekhar, who's the founder of TaxNodes. He's the ex-CEO of ZebPay. He's a CA by profession and also served as the CFO of Urban Ladder. Thank you so much, Avinash, for taking out time. It's a pleasure to have you here.
Thanks, Samarth. Thanks for inviting me.
Thank you so much, Avinash. The second panel member that we would want to invite to our presentation and webinar today is Vishva Shah. She's a CA by profession from IIM Ahmedabad. She's currently serving as the AVP Finance at ZebPay. Thank you so much, Vishwa, for taking out time, and thank you so much for coming here.
Thank you. Thanks, Samarth.
The third person whom we would want to invite as a panelist on the webinar is a very senior person in the industry who's been here for a long time. We would want to invite Mr. Muthuswamy Iyer, who's currently serving as the Senior Director of Compliance at WazirX. Thank you so much, sir, for taking out time and being here. It's a pleasure to have you.
Thank you. Pleasure is mine as well. Thanks.
Thank you. The fourth person whom we would want to add onto the webinar as a panel member, who we would want to invite is Suraj Sharma, who's currently serving as the head of public policy and government affairs at BNS. He's one of the youngest members on the panel today, but his achievements go way beyond his age. So thank you so much, Suraj, for taking out time and being here. It's wonderful to have you.
Yep. Thank you, Sanjay, for having me.
The fourth panel member, or the fifth panel member, my bad, that we would want to invite today is Mr. Venkatesh, who's currently serving as the SVP and head of public policy at CoinSwitch. Thank you so much, sir, for taking out time and being here. Really honored to have you. Thank you so much, Mr. Venkatesh. So your voice is not coming through. Sorry.
Thanks, Samarth. Pleasure to be here. Thanks.
Yeah, thank you so much. And the fifth person and the last panel member, the sixth person whom we would want to have here and invite amongst ourselves is someone from Liminal itself. We would want to invite Mr. Anagh, who's currently serving as the AVP of Legal and Compliance here at Liminal. Thank you so much, Anagh, for coming here and being a member of the panel. We are super pleased to have you with us.
Thank you, Samarth. Pleasure to be here.
Thank you. Thank you so much, panel members. So to start off the conversation amongst ourselves, the topic for the conversation that we're going to have today is navigating PMLA compliance for Web3 businesses. As we all know, PMLA is the government's scheme to counter money laundering and everything that's happening inside the money laundering scheme of things. And from a recent notification, we have been made to understand that now the government is also making conscious efforts to bring Web3 into a regulated format, right? The government of India is wanting to make Web3 as a regulated business, as a regulated practice, and they have mentioned certain pointers under the new notification of how Web3 businesses in India will come under some sort of scrutiny in terms of reporting for their activities, for their proof of reserves, etc., right? So the entire conversation today will be around navigating the PMLA notification and compliance for Web3 businesses in India. And the six panel members we have are stalwarts in what they are doing in and around the Web3 business and ecosystem, not just in India, but across the globe. So thank you so much, panel members, again. And without wasting any time, I would want to start with the webinar. And the first question is for Suraj. The government is ambitious to regulate the Web3 space, for which they amend the PMLA guidelines to bring the virtual asset players under the purview of PMLA. What are the first thoughts that come to your mind for the same?
Yeah, hi. So my initial thoughts are that this move signifies government's sort of a recognition of the undeniable fact that cryptocurrencies or Web3 technologies, they have a massive impact and have a massive influence in the digital asset space. And it is starting to have the same ripple effect on our economy as well. So first and foremost, it's important to note that any regulation, it comes with its set of, I would say, challenges and sort of drawbacks. Indian crypto industry is no exception. However, from a broader perspective of policy, it is crucial to underline the necessity of these regulatory frameworks. Um, they are designed not only to safeguard the national financial system, but also sort of provide safety rails from any potential illicit activities that might take place on the backdrop. So, understanding this sort of a regulation, it requires a prerequisite for some sort of legitimacy and stability within the industry. However, for me as an individual, I think it is very reassuring to see that the government is actually attempting to stifle this promising sector. However, how these regulations play out to be is something that would be seen in the coming times. I mean, it's still in the very nascent stage of sorts. But I see it as a good step. And however, I mean, it might have some impacts, some temporary impacts, some short-term impacts on the businesses in India per se, acclimatizing themselves to these new changes. But in the longer run, I think it gives us a good understanding that crypto and Web3 technologies is something that is taken into serious consideration by the government. And yes, like totally excited to see what's to come.
Thank you so much, Suraj, for that answer. Again, Suraj, for you, and this follow-up question is for Avinash as well, right? Like you briefly mentioned that during the current times, the changing regulation might be a little problematic for the larger customer set, right? So Avinash is currently serving as the founder of TaxNodes, which helps individuals and businesses, with their taxation filing in the Web3 ecosystem. So this question is for the two of you. Is that how do you think businesses are currently navigating in the Web3 ecosystem with these impeding regulations? I know it's difficult, but what are businesses doing from a long-term perspective to bridge this gap, if I may say so?
This is for whom? Which may me?
Both you and Suraj, like would really love to understand your views, because you're
Yeah.
again in the taxation part of things, which is the first step towards regulatory compliance. So that is why I
So I
had
will
the
make
first.
few points. Yeah, I will make few points here actually. One is that what we have to look at from a long-term perspective. What is like next 2, 3, 4 years will look like. Uh, what industry wants, and I think what government is also looking at, is to regulate this sector the way they regulate financial sector. Okay, and as of now, we are nowhere there, at that level basically. So my guess is that government would like to start, and this happened in when they were imposing income tax on, or like clarifying on the income tax, and now on PMLA, is that they will come up with something very very harsh, something very very like which, because government also doesn't know the entire scope, entire the field. So they will like to cover everything, which we from our side may look like that is very harsh, or from it, they are like going very very broad. But at the same time, my view is that over a period of time, this they will obviously talk to the industry. They're already, I think, talking to the exchanges. They will understand, and I think over a period of time, both industry will obviously this opens a dialogue. Okay, so industry will actually give them their feedback, their concerns. So if something is not possible, something may take time to implement. So this process of discussion between the government based on this law, current law, for example. I believe from a long-term mid to long-term point of view, it's, I think, very, very good move in the right direction. Short-term, obviously, there may be some hitches, there should be some roadblocks. But my understanding is that industry and government should be able to work it out.
Also, just to add on to this, I think basis my recent conversation, I was also trying to understand this from one of the government officials, that what direction is the government actually trying to go forward to. And how he put it was that after providing the COVID vaccines, the Indian government is trying to sort of put in ethical vaccines for crypto businesses and the Web3 industry to make sure that the customers and the consumers are like their interests are safeguarded. So I think that very well puts into place a very good perspective as to what the government is trying to do.
Got it. I think that makes a lot of sense. Thank you so much, Avinash and Suraj, for that. So the next question is directed towards Venkat sir. So for exchanges, how are you planning to implement travel rule? From a policy perspective, why do you think the government is focusing so much on travel rule?
It's an interesting question, Samarth, and at this point, uh, it's too early for me to sort of give you an exact view on how either our platform or the industry in general plans to implement travel rule. Currently those discussions, like Avinash said, are ongoing with the government. The travel rule is a complicated regulatory and operational issue, because the travel rule not only covers originators, it also covers beneficiaries. So essentially the idea is to cover the full value chain from start to end of either a crypto transaction, or of the entire sort of life of a crypto, from where it originates to where it terminates, which basically means that there is every possibility that third party exchanges, possibly hosted or unhosted wallets, exchanges that are not part of the Indian ecosystem and outside India's territorial jurisdictions, they will all, or they should actually all, get covered under the travel rule if one has to implement the travel rule in toto. Um, from an FIU or from a government standpoint or from a PMLA standpoint, our sort of territorial jurisdiction ends where our borders end, and therefore, for a travel rule to be implemented in its full entirety, we still have to figure out how does this get implemented from a government standpoint outside of India. And I think that's where some of the comments that the honorable finance minister, etc., have been making over the last few months about a regional, international, global kind of regulatory mechanism for the crypto asset sector. I guess travel rule will probably get subsumed within those overall conversations, because unless you have the full value chain for a crypto transaction covered, it will be nearly impossible for any one entity here in India to implement the travel rule in the manner in which the government expects us to do that. So net, those conversations are currently underway. And we will hope that over the next few weeks or months, we will get some clarification on what is the expectation, certainly from Indian exchanges, on our implementation responsibilities on the travel rule.
Got it. Thank you so much, sir, for a very detailed analysis and insight on how this is going to be taken forward. For the next question, I would want to direct this question to Muthuswamy, sir. An interconnected guideline to this in the sanction screen process. The regulation states that sanction screening of all transactions need to be carried out by VA providers by placing the wallet on hold until the screening and analysis are completed. What do you think are the possible ways to comply with this and the challenges with the said guideline? So you're on mute, sir.
I would divide sanction screening into two parts. One would be UNSCR sanction screening in terms of whether the name of our user matches with any tainted entity, and doing due diligence on that. And second is using forensic tool to identify whether any particular wallet is under sanction. So typically now each withdrawal I'll first speak about withdrawals. Each withdrawal would be subject to scrutiny. One, to understand the beneficiary information or destination information, and also ensure that the said wallet is not under a sanctioned list, which is there in the with the third party forensic provider, and then other due diligence which exchange would do, and then permit the transaction. So particularly each withdrawal has to be scrutinized. Similarly, if there is a deposit of crypto deposit, whether that crypto deposit is coming from a compliant exchange, or it is coming from a risky jurisdiction, or it is coming from an unhosted wallet, and whether there are any sanctions in that wallet, whether the exchange would allow any further process on that crypto, that would need to be decided, and that's what would be from the inflow perspective. From the outflow perspective, this has to be checked again on the third party forensic tool. However, the only disadvantage here is that this is a limited repository, this is not the bible, so it would not encompass all the sanctions or all the tainted entities. So that would be our success or failure would be limited to the information which is available in a particular forensic tool, which is commonly used by all providers.
Got it, got it. So, sir, you just briefly mentioned about a fact wherein all withdrawals, will need to be monitored in some sense, right? So there is this another question or a point that I had is that with the growth of generative AI and everything becoming more transparent with AI processes, getting into legal and compliance as well. Do you think by any chance we will be seeing some sort of a solution where this process also gets automated with AI in some sense?
This would be semi-automated, I would say. In fact, the exchange needs to have a profiling of the customer and its records. So it's like, the customers need to be profiled as per jurisdiction, as per their income range, as per their profile, as per their occupation. This is one aspect of it. And the second aspect is screening their wallet. And the third aspect is screening of their name with. So this actually involves three interfaces. So it would be not completely automated, but there is definitely scope for automation and some intervention of technology largely in this space.
Got it. Got it. Thank you so much, sir, for those insights. So the next question is for Anagh from Liminal. Under the current PMLA guidelines, there has been a significant focus on counterparty due diligence. Could you explain the counterparty from Web3 perspective? And how can counterparty due diligence help towards the prevention and detection of financial crimes?
Sure, Samarth. Thank you for that. So, in the context of Web3, a counterparty is any party with whom you transact, very simply said. This could include other users, decentralized applications, or even smart contracts. Counterparty due diligence is the process of gathering information about your counterparties to access their risk of engaging in financial crimes. This information can include things like identity, their location, their business activities, and their financial history. I feel counterparty due diligence can help to prevent and detect financial crimes by identifying high-risk counterparties and by flagging suspicious transactions. For example, if you're transacting with a counterparty who has a history of fraud, you may want to reconsider the transaction. Similarly, if you're transacting with a counterparty who is located in a high-risk jurisdiction, you may want to take additional precautions such as a trusted third party to facilitate the transaction where travel rules come into play. So there are a number of ways to conduct this due diligence. One common method is to use a know your customer platform. A KYC platform allows you to collect and store information about your counterparty in a secure and a compliant manner. Another method is to use a risk scoring tool. This risk scoring tool uses algorithms to access the risk of your counterparty. These are some of the ways. Here are some, I would like to point out few specific examples of how counterparty due diligence can help to prevent and detect financial crimes. So, firstly, identifying high-risk counterparties. By gathering information about your counterparty is first, and the counterparties who are engaged in financial crime. So, scanning or screening them against the FATF list. Or if you're transacting with a party who has a history of being a risky party, who's been mentioned in the list, then flagging those suspicious transactions, reporting those transactions as under PMLA. These are the few things which need to keep in mind. Overall, counterparty due diligence is an important tool for preventing and detecting financial crimes. By conducting counterparty due diligence, you can help to protect yourself and your business from financial crimes. This is what I feel.
Thank you so much, Anagh. That was extremely insightful and in depth. I would want to move to Avinash for the next question. So, Avinash, as we all know, transaction monitoring is regarded as a detective control. From our industry perspective, what are the factors you think may pose as challenges for monitoring transactions?
So, I think from a Web3 point of view or crypto point of view, obviously there are some obvious challenges. Basically, uh, there is some detection available as to where this crypto is going, but it is largely very limited. Basically, I think travel rule is one which uh, may help in this, but again, travel rule basically is like two parties needs to, like, if you had, there are two banks, that both the two banks needs to talk in the same language. And my belief is that travel rules, there's still some time where we will be able to actually implement proper travel rules. The second part is that is about basically sending crypto to, let's say, unhosted wallet, or as you call it, private wallets. Okay. Again, there is very little we can know as to where who this private wallet belongs to and where it is going, kind of. So that, I think, poses another challenge which may be there even after the travel rule. Uh, Third is that obviously, from a banking level, the way, like, if we have a previous history of certain addresses which are so called tainted, okay, then obviously the exchanges will be able to block those addresses in a way. But the list of those tainted addresses will also keeps on growing, and the information sharing mechanism as to which are those tainting accounts. Let's say there are another 100, 200 addresses which are added on, let's say those addresses belong to dark web. There will be a time gap between the moment those addresses becomes, let's say, tainted, to the time the information is widely available to all the exchanges, to the time it is actually executed, and by the time there may be other wallets taking the same route. So I think these are the few risks. I don't know how to solve it, how the industry will be solving it, but I think these are the 2 3 points.
Got it. Got it. Thank you so much, Avinash, for that. So the next question is more of a continuation question to this, but I would want to direct it to Vishwa. Is that according to you, Vishwa, what may be the possible solutions to improve and better on the challenges that are imposed because of transaction monitoring, right? Like what solutions or what possible ways out can be implemented for the same?
So I would start with two, obviously. One which will can be an internal solution, and second would be an external solution. So
Sure.
obviously all of us are knowing that we are in such an industry wherein if everyone is not join their hands, definitely this travel tool or whatever we are talking right now gets failed, right? If one industry is joined or one country is joined, other country is not participating. The G20 is also part of this kind of initiative they are taking. But external and internal, by means I would say internally we should, like say, IPs, location, device, many of the such small impactful information which will help us in transaction monitoring, which which the inside people should start tracking it, which will help in the transaction monitoring. And the same side, the external wise, obviously we have a different vendors which will come up with their own solutions, and continuously we have to monitor their solutions. We have to upgrade our monitoring, transaction monitoring limits. Obviously with this internal and external data, that is what we will be leading towards our monitoring and reporting system towards. Definitely this is going to be a cost effective maybe a costly solution going forward for all of us to comply with. But yes, this is how I see basically an internal and external combination of the transaction monitoring.
Got it. Got it. Thank you so much, Vishwa, for that. Panelists, like towards the conclusionary ends of our conversation, right? I would want to do a roundup wherein I will just take everyone's name one at a time, and everyone can just give their feedback, summary, insights on what they think will be the future of the PMLA compliance scheme with regards to Web3 businesses, and how do they think regulation and compliance will be poised in the Web3 ecosystem, particularly in India, but more so from a global standpoint as well, right? Suraj, we would want to start with you in terms of your insights, feedback, analysis on how are we moving forward with the entire regulatory bit.
Right. So, I mean, the very first point, like I would like to say is the what I covered initially, that of course it is, although it might seem a bit harsh at the moment, to especially to crypto businesses, I think it's a move which is in the right direction and is of also paramount importance for the industry, not just in India, but also with the government trying to bring it to G20 into the mainstream discussions. I feel it can set even like the rules are so comprehensive. I think it can even set some sort of a global standards for the crypto industry and the crypto ecosystem around the globe. So that is there. Other than that, I think very important is to make sure that there is enough innovation and it's being fostered not just by stakeholders but within the industry as well. As of now, a lot of like you asked about automation to Mr. Iyer. I think I totally agree with him that at the moment there is some sort of human, which is human intelligence, that is required. However, over the period of time, if such processes get automated, it is not only just good on the business end but also for a customer safety perspective. It will be like a big achievement for all of us. So that definitely
Yeah.
is something I feel is required along with the PMLA. Third is, Vish mentioned, that there is certain level of collaboration as well that is required, and I don't say it just from a country to country perspective but also within the industry, because
Yeah.
as of now, I'm not just talking about crypto industry or just blockchain solutions industry or the Web3 industry or the gaming industry. I feel there is a need to bring it all under a single umbrella and bring forth the collective efforts to the government. And whenever you're talking about any sort of pain points for any businesses, if it is coming from a single unit, I feel it will have a much larger leverage, and it will also have a government's ear as to seriously taking things into consideration. So that is very much like important. Lastly, I'll just bring it down to the educational aspect of it. And when I say education, it's not just education in terms of users getting to know what these KYC processes are and also complying for it. And because there is certainly a learning curve that is there. Because initially, the like all the businesses in the Web3 domain, they try to provide a smooth onboarding experience to users. However, with this new PMLA thing, it might be a bit tricky for the customers to fill up those hectic forms and their details. So that educational barrier for customers as well, I think it will be very important to educate the customers. And on the other end, education of certain stakeholders. And when I say stakeholders, they are think tanks, policymakers, these government entities, which are not related to crypto. So even if they are brought on board and different aspects to crypto and Web3 is explored, that will not only just do wonders, but I think that will also help in Web3 and the emerging technologies getting certain credibility. That is, I think that is very much due for like about a year or two, because Web3 has been doing wonders in, especially in countries like India. So these are a few points which I think if these are worked upon, PMLA guidelines along with Web3, like the overall direction where the Web3 industry is headed in India, it will be like a very good experience. Yes, that's pretty much it.
Thank you so much, Suraj, for that. That was very exhaustive. If I have to be extremely candid over here.
Yeah.
Venkat sir, what are your opinions on the entire regulatory and compliance bit?
Okay, a couple of things, Samarth. From a given the fact that obviously I belong to a platform and an exchange, and the PMLA guidelines are really directed at platforms and exchanges where sort of buy sell trading activities take place. I think the government has thrown us a challenge, to be honest. In bringing us under the PMLA net, the government is actually asking the exchanges and the industry whether we are up to the challenge, whether we can pull up our socks, get our systems in place, get information sharing in order in a manner that we can show to the government that we mean real business. We are here to sort of stay and build in India for the world. Crypto trading is not just a speculative activity, of the nature that the government has been, viewing us as, unfortunately, for the last couple of years. But, that's not for the government to be blamed, because I guess, the industry has, its own share of issues. But particularly after issues related to, FTX, etc., it is important that the Indian ecosystem, brings itself up to a threshold where the government can see us as credible and willing partners in this larger financial ecosystem. So, enough of us, asking the government for, regulation and things like that. The government has basically told us that, here it is, we've given you what you want. Our prime objective really is consumer and investor protection. The
Yeah.
PMLA notification tends to fulfill that gap. Exchanges, platforms, and sector, are you up to the challenge? I think obviously it's a huge opportunity, and Suraj has covered some of those points. Some of those other points were covered earlier as well. But what is really crucial for us going forward is to demonstrate to the government that we can actually come up to this common minimum threshold of compliance, which is an important step for future regulation. This is not yet regulation itself, like we all know, and a lot of us get very enthusiastic when we think of the PMLA notification as regulation. It is not regulation. It is really the government, really challenging us, telling us that we've given this opportunity, make the most of it, not just for the sector's sake, but also for consumers' sake, but also for India's sake. And the government, by the way, is very, very clear and very keen that they want to implement the travel rule and other FATF related compliance measures in toto, so that they can demonstrate to the world that India is not just a leader in the larger tech ecosystem, but also in the Web3 ecosystem, certainly from a compliance standpoint. So really now the ball is in our court. I think we need to, sort of live up to the challenge and prove to the government that we mean real business.
Got it. Got it. Thank you so much for those opinions and insights. Muthuswamy sir, you're next. Like, if you could just share your few thoughts on this.
Yeah, having been bestowed the G20 presidency, our government is calling for not only global regulation but also global tax standards as well. So they are at their front at an international level putting in measures to ensure that that there is regulation and there is no safe havens or some arbitrage kind of avenues. So that's what they are doing at their level, and they have brought crypto players and Web3 players into the ecosystem basically by initially classifying them as reporting entities. They still are not regulated entities. So it is actually a first step that you come under the ambit, you show me how good you perform and how well you adhere to what we say. So that's one. And also they're trying to identify and understand this business. So it's very crucial that the regulator understands this business. So without we have seen authorities passing comments without understanding the business, but from the FIU perspective, they're trying to understand the business. And as I would quote one official who did say that, okay, I believe in you. I know that you'll come up the ladder, but you have to win me over. So that's what is the idea of the regulation. So what we as an industry must do is one to be erring on the safe side. Refuse customers in risky jurisdictions, put a lot of controls. Maybe initially it would look like a business loss, but definitely we should forego that business, and also engage continuously with the regulator, because in the long run I see that there would be a self-regulatory organization assigned, and it won't be long if we toe the right line. It won't be long before we become a regulated entity from a reporting entity.
Got it. Got it. That's a very crucial insight in terms of reporting to regulatory entity, right? Thank you so much, sir, for those insights. Vishwa, if I may request you to go next.
So I think we had heard from all of three of them, so which is quite insightful in terms of collaborative effort. What that is what gonna be a first kind of foremost stuff which we after a PMLA and we as an industry would look forward, and we can definitely work together on that line. Obviously complying this by maybe reporting, identifying, monitoring. All of us are going to be working with different vendors and do this compliance, but then this PMLA will bring definitely and all of us together as an industry in front of, or maybe gives an eyesight to a government that it is not just what do you call crypto is not for just illicit activities, but these are really tenders which is going to be for a longer period. And we can, by this regulating this can be a real good class of assets for a longer term. Definitely, it's not going to be a short term battle. It's a long term battle. But then PMLA gives us at least a step forward as an industry together, and maybe as all of us are collaboratively together to keep monitoring, keep reporting, keep doing whatever compliances and help ourselves to be better in this industry and grow better. Yeah.
Got it. Thank you so much, Vishwa, on that. Avinash, if I may request you to share your thoughts.
So I think everyone has shared very good points. I have few different points. I think which exchanges obviously will be reluctant to state. One is that it is not going to be an easy battle. I mean, next 2-3 years is not going to be easy. Although in the industry and the government will try to work together, but it's not going to be easy because by nature crypto is global. Okay, and what we have to look at as a society, as a country, is when government is framing laws and we are implementing it, is that whether the regulatory arbitrage is available or not, even for short term. Because what is going to happen, and it's already happening, is that because of this regulatory arbitrage, especially on the tech side, we have seen is the volumes are going out. Okay, and the in a way the government, in a way the risk which we want to prevent or the risk we want to reduce is actually increasing, because if someone is trading on Indian platforms, okay, government has much more better control on every part of, let's say, whether it is protecting customer or from a regulatory point of view, fighting crime. Okay, they have much more control. So I think next 2-3 years we have to really balance in terms of moving towards regulation, but at the same time ensuring that not too much regulatory arbitrage is not available, which may in fact defeat the purpose.
Got it. Got it. Thank you so much, Avinash, for that. And to end our entire panel discussion, I would request Anagh from Liminal to speak his views and insights and what we are doing here to comply with the new guidelines. So, Anagh, on to you.
Thank you so much. So I would want to be very specific when it comes to PMLA. So when all the players in the market have been brought under this notification as reporting entities, there are few things which are which the government wants, which are necessitated by them. So keeping that in mind, first few points which come to my knowledge is the financial security which can be enhanced. From what lens the government is seeing and trying to understand that and explain it. So by treating virtual asset players as reporting entities, the authority is able to strengthen the overall financial security ecosystem. So this might address the problem of money laundering, but there are, as other panelists said, there are other challenges, like all players have to come into play, and there has to be regulatory sync to that. So one point there. This will definitely lead to an improved KYC compliance. So going few years back, the KYC compliance that the exchanges did was in line with what RBI suggested, but there needs to be done more. So we were still a long way from doing what was done, and we are building on top of that. So requiring all the virtual asset players to maintain this KYC details for their client ensures a clear understanding of who is transacting and using these virtual assets. So that is the second ideology behind what government thought of this. Third would be enhanced monitoring and surveillance. So the inclusion of virtual asset players as entity facilitates better monitoring of transaction involving these assets. So it enables basically regulatory authorities to track these activities, identify these potential risks. So yesterday we met the Minister of Information and Technology, Honorable Mr. Rajiv Chandrasekhar, and he said that there needs to be definite guardrails put around this entire Web3 ecosystem to make it happen, right? So by all of these criteria, the ideology is deterrent of illicit activities. So by imposing beneficial owner, imposing KYC requirements, creates a deterrent for individuals or entities involved in these activities. So that is the ideology from which I think the government is coming from. And lastly would be an international compliance. So many countries and international bodies have been emphasizing, like one of our panelists said that the G20 has been made, and our Honorable Finance Minister has said that why we want to bring crypto or virtual digital assets under this digital umbrella is to ensure compliance with AML and CTF norm across globe and other norms which may be applicable to you. So this might increase the investor confidence, which is lost as of now because the regulations are from a PMLA perspective or from a tax perspective, which is hampering the liquidity of the exchanges. But we have to see it in a long-term manner. That even the securities market or the secondary market, so to say, has huge regulations in place. The longest written regulations or laws in India are SEBI laws. So why the ideology behind it? Because there has been use cases that the guardrails are broken and the trust in the economy and the specific systems were lost. So what government is doing is trying to encourage innovation to come out with solutions. Definitely there are steps which will hamper it, but I think it will lead to a certain path that we can come in sync with the government and make it right by imposing what is required.
Thank you so much, Anagh, for that. That just paints out an entire holistic picture. And towards the end of our conversation, thank you so much, panelists, for taking out time and having this conversation with us here at Liminal. The insights that all of you provided, I think, is going to be of great value add, not just to us, but all our viewers and listeners as well. So again, from the entire Liminal family, we extend a hand of gratitude for taking out time and having this conversation. And I think together as an ecosystem, as some of the most prominent and emerging players in the ecosystem, if we collaborate like we rightly discussed, we will be able to achieve the picture of regulation and compliance that we are looking at. So again, thank you so much, folks, for taking out time, and we hope to do such webinars more and more in the future with more regulatory and compliance practices coming out. Thank you so much, everyone.
Thanks, guys. Thanks so much.
Thanks,
Bye.
thanks everyone.
Thanks everyone.
Yeah,
Thanks.
thanks, Samarth. Yeah.
Thank you all.
Thank you.